We are also, as I say, bullish on TSMC. So as the world's leading AI fab, they are manufacturing the vast majority of AI chips. And you've seen the demand from these hyperscalers as they continue to spend money. That's feeding through into TSMC's revenues.
Hello from Mannheim. We're here today at the Fonds Professionnel Congress. With me is Jack Brewer from Guinness Global Investors. Hello.
Hi, nice to be here.
You're managing a Global Innovators Fund. Where do you find innovation? And is it kind of tough to find it recently?
Yeah, look, of course, there's a lot of innovation at the moment where a lot of investors are focusing their time on is in the United States. Clearly, when we think of where the AI boom is happening, a lot of the US hyperscalers spring to mind. So, of course, there's innovation. We're finding innovation in the States. But that said, we're also finding innovation in parts of Europe, in Asia as well. One of the recent additions to the portfolio is Tencent, a Chinese consumer company which we think has very good growth and innovation prospects. So that just goes to show you our fund has strong exposure to innovation in the US, but also across the rest of the world.
So you've mentioned of other countries or regions like Asia. This is reflected in your allocation on the country base?
Yes, it is. I mean, interestingly, from a country perspective, we remain relatively in line, overweight, underweights with the US, and also from a geographical perspective. But really where I think we find value is finding innovation in different themes than what investors might expect. So of course we have exposure to AI, of course we have exposure to the cloud computing theme, but from a revenue exposure percentage, that's about 35%, which means that we have 65% of our portfolio in other topics and other themes, be that robotics, next generation consumer, even healthcare, where we're finding a lot of opportunity. And of course, within those other themes, you're seeing this AI trend play out, not necessarily in the data center build out, but healthcare companies are getting more innovative using AI. It's going to lead to better results. You're seeing this with robotics companies as well. So we think actually from a thematic perspective is where we're most diversified.
And everyone is talking also here in Mannheim about the AI bubble. Do you see a bubble, and how is kind of your allocation towards these kind of big AI companies?
Look, I think clearly there's been a lot of concern around valuations in the last 2 or 3 years. You've seen how well these AI stocks have performed, especially those leading the way on the chip side of things, but then also from the energy utility side and actually the infrastructure names building these data centers. So clearly there is some concern around valuation, but actually when we look at earnings growth, these are some of the most free cash flow generative businesses. They've seen extraordinary earnings growth, and they remain very high quality, both from their margin profile, but also their return on capital. So is this a bubble? Look, it's going to be hard to say yes or no. Clearly that's the question on everyone's minds. But when we look at the underlying metrics of these companies, things actually look less concerning to us. We're seeing good earnings growth and we're seeing good company performance. So in short, it's probably too early to tell. But what is interesting is if you look at where the spending is going, so these hyperscalers that have had a huge run up in their stocks, they are continuing to upgrade their capex. So last year was about $430 billion. In 2 years' time, that's going to go north of $600 billion. It's a huge amount of money. And that's then filtering through to the rest of the ecosystem. So there are concerns if this capex spend slows down, but for the time being, there are no signs of that, at least from the data that we are seeing.
And two very famous companies are Nvidia and TSMC. Are those kind of in your portfolio also allocated, or what's your opinion on those companies?
Yes, so we've actually held Nvidia in our portfolio since 2003, which has clearly been a good performer for us. TSMC is also a holding for us. As a reminder, we're equal weighted. So we have 30 positions, all high conviction, all roughly an equal weight in the portfolio. We are also, as I say, bullish on TSMC. So as the world's leading AI fab, they are manufacturing the vast majority of AI chips. And you've seen the demand from these hyperscalers as they continue to spend money. That's feeding through into TSMC's revenues. Now, interestingly, there's growing competition from the other fabs, Samsung, Intel, but we remain confident that TSMC is a good way to play this AI theme as the world's leading fab. And of course, Nvidia, one that everyone has a view on. Again, they continue to have superior hardware, they have superior software, they have superior networking, and we think they have a very strong moat. So we remain high conviction within Nvidia, and it's a full position in our fund.
Says Jack Drew from Guinness Global Investors. Thank you very much, Jack.
Thank you.